The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show. Wednesday morning, right before Thanksgiving. Everybody knows that. And I hope you guys have bought everything from the store you're going to buy. It's going to be crazy. The turkey's in the oven here, actually, already. Don't know why. Just got so excited, put it in there early. All that doesn't matter. Let's talk about the euro. And we're getting some good breakdowns here now. We've come off of some of the resistance areas from before, namely that 108.16.17. We've broken the 107.10. Yesterday we talked about, where do you sell this thing? Where do you sell this thing? Had a caller talking about this 107 area. We always want these profiles, if they can, to act like magnets, and close below, go back and retest. We had that happen, actually, the week of the 18th, 17th, 16th. We kind of had that breakdown and then go back and retest, and actually it was a little bit too much for me. I actually got stopped out of that trade, but got back. This is the eternal short, in my opinion. And it has been the eternal short since 135. And if you guys that don't watch this show, I'm just going to go back and put this win on the board for you of why this has been the eternal short. We started breaking down there summer of 2014. I was actually when I started the show. Tom and I were talking about it. It seemed like yesterday. I remember the shirt I was wearing. I remember the unshaven face. I'm going to cry. But we were talking, hey, that was the summer 2014, just started the show, and the euro broke finally in July. It's like, I think it was the first week I started. And literally, just because of this situation and these long-term profiles, it has been nothing but a short ever since. There's been some trading opportunities on the shorter term time frames on the long side without question, because we've had 1,000 pip rallies, but the profiles have told you that the long term trend is down. We've been in some balanced areas before, but you're still looking for every opportunity. Resistance, remember, we always talk about rally into resistance on the short trend, and then breakdowns below profiles on the short trend. So those are two opportunities a lot of times. And in the middle ground, in the balanced area, you always want to try to identify, where's the prevailing trend relative to these profiles, and let's try to find long-term inflection points, the intermediate-term inflection points. That's the way I usually put levers on things. The shorter-term stuff I usually use to kind of regulate it, but when we get into these inflection points and breakdowns on the longer term views, then I kind of go a little bit more all in than I would on these shorter term trades. Now, there's kind of a monetary trading plan you have, and then there's the technical plan, and there's a fundamental plan, obviously, but on that monetary plan, you've got to be willing to put your risk reward scenarios in the right sense. And if you're trading on shorter term time frames and you're, trading a little more often, you got to be willing to keep the powder dry, as they say, for when we get into these more riper opportunities, in my opinion, on these longer term inflection points. So, your trading plan is your trading plan. That's totally up to you. If it's working, that's great. You should probably stick with it. But this is what I have done, especially when I was in the border trade. I had a short-term account and I had a long-term account. I completely kept them separate because you don't want these short-term trades bleeding into these long-term investments. And you guys know exactly what I'm talking about if you've been doing this for a while. So, just keep that in mind. The euro has been something long-term stance, just been very good to whoever's been watching this show. Let's go into the dollar. We still, let's see where we're at. Yeah, still haven't reached the ultimate targets up top of 128.29. I think we're going to blow through that. We had a little bit of we talked about yesterday, a noise area on top of these inflection points, and what's your goal? We reached a low of 99.36. That unfair high is at 99.67. So 30 pips. Yeah, I'm looking at this as a collection area to move higher anyway. We talked about that. We talked about kind of got to say uncle below 98.79. That's, without question, possible kind of trend change situation on the intermediate. But this is a collection area. I'm okay with taking a little heat down here on the dollar trade to just completely blow through that 128.29. And that is not going to be good for the euro with this thing kind of looking like it's on the launching pad, to be honest with you. And I don't think these inflection points are actually going to hold the dollar up top. But that's our target. That's been our target. And where's our target on the euro? I never really talked about that today, but it's the broken record. And the broken record is bare minimum these previous lows of 104, 1.104, excuse me. God damn. 104, excuse me, 104. And ultimately par. And there's starting to be some folks talking about, it's going to par, it's going to par. That kind of scares me, actually. But, that's the ultimate goal. I think we're actually going to go lower than that. I see, zero reasons for Europe's currency to be above ours, above that par scenario. Let's take a look at the yen. Peak TF, I completely agree with you. The yen trade's been lagging a little bit here from what I'd like to see it do. I, of course, am super happy to see this thing kind of hanging out above this unfair low here, and I think we could especially launch into that 125.28, which is a really good risk-reward scenario if you're putting stops in on this thing. Bottom, 122.55, 122.60. That's where you're kind of orienting the stops below. Based on, when I say these inflection points, by the way, that's the mark. But you've got to be willing to look at the height of the box, the height of the profile. In this case, the height of that profile is approximately 270 pips, maybe. So you've got to be willing to look at, what's a 10%, 15%, maybe even 20% noise level below these inflection points or above in short cases to be able to kind of just give it a little breathing room. Here's that 122.60. So not exactly making me super happy. It should be going up a lot quicker, actually, but I'm still not interested in trading this from the short side at all, ever, right now. Australian dollar, this is one that, really, I told you yesterday and the day before and last week and the week before, we just have had this killer setup down here, and this thing's kind of borne itself out. Higher lows on Navigator, lower lows on price action. And then we were, okay, it's a stock that's down. Logan, what are you talking about? Why are you trying to nibble on this thing? We talked about getting a close above 71.69, 71.70. We got that. And then we got that powerful retest this week. And we talked yesterday about how this thing was looking so cool, getting above profiles on the daily and using that as a let me just pull up this number again here. Using that in the weekly unfair low down here as a fence to lean on the long side with targets at 74.39. I love how this is acting. I love how this is acting while the dollar's rallying. This is not a component of the dollar, but man, really, really excited about this, making about another 200 pips. If you guys have any questions about that, let me know. All right. We're going to get into the S&Ps right after the first break. And let me get in, and we're going to kind of look at the scanner and how that applies to the recent S&P action. It's been a little choppy around this 2089 area. I mean, you guys know that, and I talked about not going short this thing, but we're going to get into that in a little bit. Shanghai is just, you know what? Yep, got that, Al. The Shanghai. Excuse me. Got a half a turkey caught in my lungs here. The Shanghai, no changes there, but this is kind of that launching pad looking scenario as we're kind of gathering ourselves in these profiles, and that's not going to, be the end of the world for the U.S. stock market. That's going to be something that, oh God, everything's okay in China. You know the story. You've seen this movie before. And that's not going to be something that the U.S. stock market's going to be unhappy with, that the Chinese fears are somehow now over. Everything got fixed in 3 weeks. Everything's rosy again. Don't worry about anything. Just go to sleep. Take the Ambien. Watch CNN. Listen to Anderson Cooper. Everything's going to be fine. So the 10-year trade, again, just to reiterate this, 126.17, 127.11 into 127.19 still the targets. I love how this is acting. I got a little bit of a pop yesterday when the market pulled back, which is kind of what's supposed to happen in that normal, or has been an abnormal relationship, but now kind of a normal relationship. Target's still a little bit higher. Do I think the stock market's going to go higher? Probably. Is that going to bode well for notes? Not really. But again, you've got a nice little fence to lean on down here, 126.17, 18, and not a bad trade. Not a scary trade, put it that way. Gold, just to hit the usual suspects. I hear you, JB. It's amazing what Ted Turner, what happened? The first thing that happened was Jane Fonda, I guess. Anyway, 1086.87, still the kind of land of no return on the south side for gold. 1086, 1087, 1090, still the case. Silver, I think you can pick it up lower. It's going to have to move higher and create some confirmations to get back in that long trade. Guys, we'll be right back. Stay tuned.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Talking about I think it's Jane. Jane Fonda, she has come out, in the last decade or two, admitted that going to Hanoi during the Vietnam War, and admitted that may not have been the smartest thing in the world. But when you're young, you're stupid, so you got to forgive her if you can. But I don't forgive her for turning Ted Turner into a complete wacko about this CNN thing. I know he lost control, but my God, man. Oof. Yeah, exactly, Pete D. The workout videos kind of saved her also. When I was young, that was kind of a big deal on a couple of levels. But, Turner, he turned Channel 17 in Atlanta, Georgia into just a massive empire. The guy willed that across the finish line. And, 24-hour news channel, yeah, that's really going to work out. I'm sure he had a couple of people telling him that, just like the 24-hour sports channel. Yeah, that's gonna be a winner. But that was the shape of things to come, obviously. Very similar analogy. Tom O'Brien started out on a small station, and now we've got basically a global network on the internet, and very admirable, similar analogy. And I think TFNN is going to go even farther. We're working on that right now. So, in the midst of the TNN wave here, really excited every morning I get up that I can be a part of this too. It's just a pleasure, and you guys are great in the den. Promise. Just by all means, keep coming. Gold. All right. we got finished with that, and I'm finished kind of flapping my mouth here about things other than trading. Let's go into the S&Ps and let's talk about this because, yesterday during the pre-market, I mean, we were having here's the 240s. Here's kind of what was going on pre-market. We were coming off those 2088, 2089 areas. And, this is the drill. I've got the scanner up right now, and guys, I look at these two dials more than anything else, especially when the VIX is relatively low. When the VIX is relatively low, then the profiles, most of the time on these instruments have tightened up, right? So you get more immediate breath changes. When the VIX is low, but when the VIX starts getting a little pumped up, you have to kind of scale down into these areas right here. So I'm going to go to our 240s. We got kind of close there, but on the crossover scene on the 240 and the 60s obviously crossed over. And we had somebody making comments yesterday. I forgot who that was. It promised they were going to call in today. Promise. Don't break your promises. I forgot who it was. Anyway, they said they're going to call in today about the breath situation and how they were kind of what their experience was with it. And I hope they call in. But, 60 Minutes obviously going to get chopped up chopped up in kind of noisy situations with the S&Ps. But as we look at this, there wasn't a lot of leverage in my mind, and with the classical pattern that was going on in the S&Ps and trying to get some, trades off of this 2080, 2089 area rounded off. They're just, come up here, compress against it, wash some people out on the short side for sure yesterday that were kind of, leveraged up for this thing to come off of this area pretty quickly. But there wasn't, I told you, I'm not even messing around with this 2089 area on the short side because classical technicals, the breath situation, no reason yet to look at this that there's some internals changing and the ability to take advantage of that. And now we're trading above 2089 again, barely this morning. And, barring some kind of massive terrorist situation, I just don't see people before Thanksgiving starting to exit this thing. Most of the time when there's a big weekend, especially in the past 7-8 years, what I've seen, they just buy it up. It's not like people are concerned and want to get out of it before they don't have the ability to trade on the weekend. So we're going to be right back. We're going to finish about this and get out of left field and come back into the regular world of trading.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We were kind of finishing up about the S&Ps, but I think we have Tucker from Longwood, Florida on with us. Tucker, are you there?
Morning, John.
Hey, how are you?
Fine. Thanks
Good.
for taking my call.
Yeah. Anytime.
I am just learning of your scanner, all the process. I really like that SP 500 market grid.
Yep.
And one of the things I've been doing, which is kind of helping, because it doesn't have a timestamp on it, really. So I want a question. That refreshes, you said, every 60 seconds, right?
The worst case scenario would be about every 2.5 minutes. I mean, we actually just took some time and spent some more money to separate things even more on our side. So we got a database that, it's actually a proprietary database. It's not even an SQL database that's running all this in the background, and we're always trying to optimize it. But go ahead.
Right. Well, what I started to do, because I thought yesterday morning the market was down, I guess because of the plane crash.
Yep.
And so what I tend to do is I go out and I take that chart. And I don't know if this is the right way to use it, but I go to the right, very right, and then it shows the percentages, right?
Yep.
And the time, the hour that you're in.
Yep.
So what I started to do is I take a screen print of that and I throw it into a Word document.
Okay.
And since it's not time stamped, I put the time that I did that. And then it's kind of intriguing to watch. Of course, it shows the statistics out there, not the number above and
right
included and below. And then, say, a half hour later, I went out and took another shot of it.
Mm-hmm.
So I just started doing that through the day, and it really is kind of telling on the direction of the market.
Yeah, I mean, it really, we did a lot of back testing on this, Tucker. We didn't just throw it against the wall. And what we found, especially on the longer term, it really, what it does is, people are always looking to stay out of trouble. I certainly am. And what it does for me is it keeps me from, I'm just going to coin it this way. It keeps me from doing stupid things. It keeps me from, okay, the market's gone too high and I'm going to start shorting it. And, I don't have a lot of reasons, but I got a hunch. I mean, if I start playing that game and I look at this information, I'm a complete moron to really trade against this information, because I know historically what it's, really done, with the price action relative to this information. And it's all about, for me, just like yesterday, we talked about 2089. I'm like, I don't see a lot of leverage here. I don't like the setup. You don't have anything in your favor as far as the internals, and you need some confirmations. And, we just had a little move down, and it could have gone a lot farther down, but, the odds just weren't there, and if I'd have gone short against the 89 and made a couple of points, I would have gone, okay, but that would have been a trade against, confirmations. And the breadth on a long-term basis does that for me, but on the short-term basis, on the 60-minute, it really does. It almost is a complete S&P trading system if you just, green above red, red above green, in my opinion. Also keeping in mind those long-term inflection points. Now, what I'm going to have the programmers do is, if you'll notice on the left over here, you've got S&P profile levels, S&P 500 profile levels. I don't know if you see that. Okay. Yeah, so what I'm going to do is I'm going to have them put in every single time frame over here. So you kind of, I don't like to flip back and forth between a zillion things myself. So I'm going to have them put that in this next build, which is coming out, I would say Monday, Tuesday.
For like the hour, 4 hour daily and weekly.
Yeah, we're going to put those over here, and we're also, there's a couple more additions that, just little things that maybe we missed that we're putting in, just to make it ease of use. So, yeah, I mean, I'm a big believer in letting this kind of be the overhanging tone, or as Basil coined it so perfectly, tide of the marketplace. And then being able to kind of use the longer term inflection points to kind of pick the battles. But the 60-minute is a real good day trading kind of do or don't type thing.
Right. I'm a swing trader for stocks, and more of a day trader for ETFs, leveraged ETFs, and that's where that would seem to work the best.
Yeah, go ahead, Tucker. I'm sorry.
Well, I was going to say, I was looking at it's kind of like a stochastics when they get really high or really low, potential turn there. I was looking back even over the hourly period, but more on the 4 hour period, because I trade somewhat off of the 120-minute, 240 or 120-minute chart with the stochastics and MACD, the swings through that, of course, depending on the market also. But I'm trying to coordinate the breadth chart here along with the with what I'm doing using trade station charts. So.
Right.
But when it gets down, for instance, on the hour chart, if you go back to 11:18 at 6 p.m. or even at 3 p.m., the market was obviously up because of the where the below was at, and then it slowly turned up.
Right, and go ahead.
Yeah, and when it hits those extremes, I guess is what I was looking at. Is there any? There's nothing yet, probably really to. Like it's over. It was over 80% at 3 o'clock on November 12th. The below, and then the market slowly turned down.
Yeah, we've looked at that, and I didn't want to throw too many things on somebody's plate about how to read extremes, and then they're going, well, I thought the crossovers were the big deal. I mean, it's more pieces of the puzzle, and you can look into that and read into it. And I also use the middle ground, the stocks that are kind of trading for the most part, in the balanced area on these time frames. But those are kind of more artistic views, and I just really like the crossovers. And I don't mind not getting the high print or the low print on a move. That's, if you watch the show all the time, you know that I'm just kind of Mr. Let's just wait until we get some confirmations, and not kind of shorting blindly into something or even buying something in the hole so far. But the crossovers kind of solve that even more so for me on that level. Yeah. But what you're talking about is definitely a piece of the puzzle.
Yeah, I was looking at that more on the point of getting worried about an exit. Like if I'm in the position and it's up at that 80%, I need to think about tightening my stop.
Yeah, and that's why we're putting more of these levels on the breadth chart, just so they're very, very plain view. Because I was telling DeMantis the other day, I was like, you know what, man, the only way to really get those levels, unfortunately, if you're kind of trading S&Ps, is to go back to the futures section, and which I'm doing right now, and mouse over the cells in the ES S&P Mini grid there. I was like, that kind of sucks. So let's we overlook that, and let's put it plain as day on the breadth charts, or even maybe right in the upper right here in the middle. Maybe we just make some space and put them right in there, so they're so when you access the index itself, Hong Kong, Eurostoxx 50, whatever, they're right in your face there all the time. And that, those levels are, it's like two things. If you're using 60-minute breadth and day trading and doing some short-term leveraged ETF, things like you're talking about, you definitely want to be aware of the broad market inflection points. An inflection, the word inflection point is, in mathematics, it's an area where you got a kind of slope trend change possibility there. So that's kind of what I think everybody needs to know is, like, where's the broad market going to either stall, turn around, or maybe even kind of race through it as people have to cover on the wrong side of that inflection point. And that would help. That's how I trade stocks. I mean, I look at the broad market. If you watch this show, this is the broad market. Find the anomalies, and then look at the inflection points of the index itself, maybe the sector, but definitely the inflection points of the underlying instrument that I've kind of put on the radar screen to place trade with.
Well, in my prior life, I was a banker for 21 years, CFO, and on the board, things like that. But, and then I had a midlife crisis, moved to Florida, and became design banking software. And I just got to say, for having worked in that field, this is a tremendous job that you've got here. Tremendous product. I'm just scratching the surface over on what I know it can do.
Well, thanks so much, Tucker. This is, it was not our best work 2 years ago, but we kept playing around with this, and we have considered. I mean, I've got institutional guys that are telling us that subscribe to this on Bloomberg. They're like, you don't even need to give this information out. You guys should run a fund with this information. And I fully believe that it can run an entire major funds portfolio for them almost. I mean, you get a lot of different pieces of the puzzle with this piece of software, and I think there's two ways to go with anything. You can kind of hold back information and charge a lot to an institution for, you can try to almost do a social justice and get it out to everybody, so it hopefully keeps them out of trouble and allows them to manage their own portfolio and get some great possible actionable ideas all the time. And we've kind of decided we will go that second route. And I just feel like, with the amount of information that's going on in the background, the global indices that we've got in here, I think that, this thing has a lot of appeal to a lot of folks, and that we're going to try to go that route with it. So,
yeah, I was looking at it more when I first, I tried it once, and I thought more it would be for people who traded futures. I just, for some reason, my mind didn't click to it. and it didn't have all that many ETFs in it. But for instance, now I can go out on the breadth of the ETF for XLF and do the same thing as I do on as telling you on the S&P, and so it's really great information.
Yeah,
I should be able to complement whatever I'm doing now.
Yeah, I really appreciate the comments. I mean, it's nice to hear those. We kind of stay in the laboratory and don't get a lot of comments a lot, so it's just great to hear this.
I'm just scratching the surface. I have one more question, if I may.
Yes. Okay.
And I think I asked you this once, but I'm not sure I either got the answer or understood the answer. On the Russell 2000 futures, under the weekly, it shows 1919 in the red, right? Now, if I interpret that right, that says that for 19 periods or 19 weeks, it's been under the wherever the
latest balanced area, yeah.
Balance the POC point of, is that right?
It's actually completely clear and clean of the latest profile.
Okay, so it's under the bottom of the.
Yeah, here's the level of the market. There's that. I'm showing it. You're probably seeing a delay, but on the screen if you're looking at it. But the landscape view, that latest profile is way up there on the weekly. But I will explain this. And I've got this in a manual that I hope they're going to input that in the. I talked about this in the webinar a little bit. Did you have a chance to watch that webinar, by the way?
Yes, I did. Excellent.
Oh, okay, great. So these arrows, like for instance, on let's just go to the Japanese Nikkei 225. It means that even though we're within a balanced area in the gray here, we've been in this particular type trend up on that time frame for 25 days. And that means that the trend, considering that the latest or the first time a profile was broken on the upside was 25 days ago, and it's continued to not ever close below a profile since. Conversely, heating oil 32 days straight, 32 days in a defined downtrend as far as profiles go with an arrow pointing down. That signifies that.
Okay, so let me ask a question on that. Even though the price may have come down, that measurement is still below that price during all of those 25 days.
Correct. Well, can you hang out and I'll pull up an example here after the break? We got about 10 seconds.
Yeah, that's fine. Yeah, I don't want to take the time.
These are great questions, and I think everybody's probably been asking them to themselves, but they just haven't asked me, and I haven't been smart enough to get it out there so people could understand it. Okay, hang around, Tucker. We'll be right back.
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Tucker, are you still with us?
Still here.
Okay, great. One of the things let me answer that question about the charts in a second, but just the yen, let me just pull that up. So 25 arrow up, gray sell, and obviously green there on the weekly. So let me show you the kind of graphical representation of the Nikkei December contract here. So what that's saying really is, and a little bit of delay here, but when we broke above, okay, so we had a little bit of a breakage of profiles on the Nikkei around October 14th. We started closing below profiles there, and then we ramped back up. And then the next breakout on the upside of the profiles, it was on October 22nd. So from October 22nd to now, it's saying basically that we've been in an uptrend by definition, getting back above profiles from below profiles. And that's been 25 days in that particular type of trend up, even though we're within a balanced area right now and it's showing gray and within profiles. So it's basically just kind of, I told the programmer, said, since we got that information, let's give it to, and we can look historically, let's just give it to the user. So when you go in here and you sort by daily, what it's going to do, I just hit a sort key at the top, and maybe I didn't even explain this in the webinar. I probably didn't.
I could do that. No.
Yeah,
cool.
Exactly. Cool. These are things that are my fault. But I wanted to be able to see as a trader, let's just look at things that are in the balanced area, but let's see let's find things that have really been in a trend for a while. in one way or the other, so I can see them really easy, and then I can kind of go, okay, well, these aren't the ones just kind of rattling around with no direction. Let's find ones like feeder cattle or the Shanghai, obviously. Even though it's in the balanced area, 16 days up on the intermediate. Just as we look at the Canadian dollar's a little weird, but crude oil, 10 days in a so-called defined downtrend, British pound. So I just want, and obviously heat and oil's the big number, 32 here. But I wanted to be able to kind of sort these, and even if I go to my dashboard here and I go back to my S&Ps, I kind of a lot of times will just sort the weekly and just be able to see really quick, and it sorts them by numbers, or it sorts them by colors first and then numbers. And even though I've got a breakout or breakdown sort, I like to see things that are a lot of times clean and clear on a certain time frame. I'm sorry, there's the ones that are supposedly one bar into breakout zone on the downside. But what we've done, I'm gonna go back really quick, is I'm gonna go to breakdowns. Yeah, what we've done on breakdowns in the custom sorting is I like to see things that are clean and clear of the top or the bottom first bar on the weekly or the daily, but yet is also looking at some historical information to say, you know what, I don't want to have kind of rattled around on this area of the breakdown. I want something that's really kind of whooshing down, and that algorithm actually puts these on the board for you. So
that's
a lot of information there.
To be able to sort that like that. The reason for that original question, and we're going to run out of time, was the market had been going up, but the Russell stayed red there in that period, and I was just trying to understand, all of those. So I'll check into more, and I appreciate you guys taking the time.
Yeah, man. We'll pick it up tomorrow. Guys, have a great Thanksgiving. Stay tuned for Larry and all the hosts on TFNN. The deck is stacked. We'll hit you on Friday. You guys have a good turkey day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.